Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Tuesday, the 5th of November, 2019. I almost said 15. I have no idea why. And we're after 4:30 p.m. Central Time. Now it's Central Time. I can go with that. I'm writing a pretty detailed evening update for my clientele, and I'm explaining to them the art of negotiation. You know, all I keep reading is China wants more and more of the tariffs removed to get to this phase one. If you ever bought a home or something important of a big ticket item, you've negotiated. It could be a car, you're asking for the mats in it. You go to a home, I want all that stuff that's here. And you negotiate. If you negotiate too far, too fast, too much, period, you do it to the point of knowing how far you can go or guessing how far you can go without killing the deal, right? You'll have to have somebody on the other side that says, no, I'm not budging at all. Price is this, whatever it is. Well, that's where we're at on the tariffs. I bring this up because as China keeps pushing the U.S. on remove tariffs, and the metal market's broke, as the stock markets are at, for all purposes, record highs, the deal can fall apart. It fell apart in May. We thought we had a deal then, you didn't. Well, they're taking the, if you will, the risk commodities off. They're saying, we want a risk-on environment in securities. We see interest rates are climbing back up. Energy prices are up. The world's going to get better as these trade wars remove themselves. Maybe. Somebody out there has got to say, the president is not going to remove all these tariffs right now. If you think he is, I don't think you understand the man at all. I don't think you understand our negotiators. They're going to keep some tariffs on, period. Will they have to put on the December tariffs? No. Can they roll back some tariffs? Yes. Rollback is not going to be permanent removal. They need a hammer to get China to the other phases. And today the market looked at it differently. The market looked at it in the copper and said, hey, China uses half the world's copper. They're going to have greater need. Up you go. And as for the regular metals, they sank back today. Okay. Let's go to the weekly chart of closes. Where did you pull back to? On the close today, you're right back to that 18-week moving average of closes. So as far as I'm concerned, the market has had that retracement and gotten back to what I call that line in the sand. Now, it's just on a closing basis. It's not anything about highs and lows, but we're in a zone. The settlement today actually put the bias of the market down as you settled at 1483.70 underneath that number. But I'm satisfied you're in a zone. That's the important thing. When we come to the chart, you're still caught in this. I pointed this out before. This big spike up to the 1540 area, down to the 1460s, and you're still within that. And you try the upside, you don't go anywhere. You've tried the downside, then you came back up. And it seems to be something of a pattern right now. The difference in the pattern, though, is that the swing line with today's action turned down. You now have lower highs, and with today's break low of 1480.70 in the December, you broke through the last low. Does the market have legs to it on the downside? Where it stopped was the 100-day average of closes. Let's take off today and go to yesterday. We had said if you pull back, maybe the 18-day average is going to offer some support. If that doesn't, the possibilities there of the 100-day. That's how I would speak. I'd also be looking on the chart to see above the market where the Bollinger Band resistance and where the support comes in. Right here is the support, the combination of the 18 and the Bollinger Band resistance up at these levels that you've tested. Will you break through and have traction? I don't know. That's been the question. You failed to the upside. You came down here. You failed to continue down. Will you continue here? This is an important number. This is your 100-day moving average of closes, and the market has been over this for a very long period of time. In terms of momentum, the slow stochastic study, let's back off a day. This is how you looked yesterday. It suddenly is pointing down, bias is down, swing line down. Everything turned bearish today. Will the market get itself oversold? Well, that becomes the big question. It certainly will if it keeps down. But Will it break through this important zone or not? Where's the resistance if you rally? Back at the 18-day average of closes. Could the market, if it just took off from here, be suddenly bullish? No. You've already got the lower low, so even if you just took straight off up, you'd have a lower low, higher high. More important to me is you're caught in this sideways action. Is it a base or a top? And that's what we're in store to find out. When we come to the GLD popular ETF, we go to yesterday, and as you can see, you were up at your resistance at the upper Bollinger Bands and overbought. The first support under the market, I would think, is the 18-day average. Then you have two levels here. I don't know that you're going to go down there or not. You pulled back. Had you gotten over 142.90 yesterday's this high, 142.90, you could actually argue you'd have had higher lows, higher highs, and maybe you're breaking out and using that as a support. As usual, the market never makes it easy. So the market pulls back. In the meantime, you've got the higher high, lower low, two levels of support right under you at 139.02 and 138.74, and you're nowhere near oversold. If you decide to rally from here, the 18-day average is probably going to be that number that it pivots against, but you're not looking pretty. GDX, well, this looks better than the other two. This is how you finished Monday. Now the market's cut through this 100-day average that it found support at on Monday, went to the 18 right here, settled under it. Okay, but you didn't break through 26.73, the last break low. 26.76 was today's low. Let's assume it breaks through it. Then what you're going to have is a higher high, lower low into the potential support of the lower Bollinger Band. I see a mess in the metals. It's that simple. And the question is, does this market turn bearish? Because I don't see anything on the other two parts that we talked about to turn bullish. In the gold-silver ratio, notice where the 18-day average of closes is. You went right back to it today, and the market is saying, okay, silver is losing to gold, but it's back to that zone where the market delineates between bullish and bearish on it. At least that's my opinion. Where'd silver go? Right back to the 18-day average of closes, settled under it. In the process, broke the pattern. Now you have a higher high, lower low pattern. And we'll look back at this and say, okay, the resistance of the upper Bollinger Band offered a lot of resistance in the market. If it breaks down, why wouldn't the lower Bollinger Band and the 100-day offer the support? In the meantime, these rallies don't have any legs to them of real big importance or the breaks just yet. In the copper, this is where I think the bulls came out today. Upper Bollinger Band. You came back to the 18-day average and the 100-day, and if you go up to it up there, that's the first challenge. You're overbought. Why wouldn't they take some money off the table? That doesn't mean they did. It's what I think. Throw the name off the chart. I could care less what the name of the chart is. I'd still say the first challenge is what I look at there. Now we look at the platinum. We have been overbought. You got to the upper Bollinger Band last week and yesterday, and so you're pulling back. This chart's not as bearish as gold, but it's got to work off the overbought condition. So it either decides to embed, and it's not even in the first phase of that, or it goes sideways to lower to get rid of that number. When we come to the palladium, I want to go back to yesterday. What do you think the goal is if you continue down? You lost the embedded reading right here, and now you get to 83.83, and now you're under. That's right here. The goal to me, that doesn't mean I'm right. My goal is the 18-day average, because I call that the line in the sand where the market likely tries to figure out what to do next. Well, here's today's action. You go right there, and that's where the market held. What is the trend going home? We closed at 1746.70, which is over the 18-day average, so the bias is up. The swing line is down. You've hit the downside support zone. In the past, this has supported the palladium market very nicely, and it's got to work off the oversold condition. You can argue with me all you want. Hey, if the world economy is getting better, won't there be more demand for cars? Cars mean emission control. I can go on and on. None of it matters. I'm just a technician looking at that. Last in the dollar index, you yesterday oversold, fighting a battle at the 100-day average now for 1, 2, about 3 days overall, 4 days. And if it goes up, I'm going to look for resistance between the 100-day and that. If it goes down, I'm looking for the lower Bollinger Band. But it is oversold, downside bias, and no trend. Today the market rallies, gets up and over this. Now, if there's no follow-through, I'm assuming maybe there's no follow-through, these two areas are support. If there is follow-through, what's the next resistance point? Wherever that top Bollinger Band comes in is where I think the resistance point will be. So it's an interesting day, and with that, I start looking at the charts of seasonal studies. Now, why? I like to know at this time of the year, is the dollar got a seasonal to the upside or downside? Is there something here that I should know? Be it Christmas sales, funding by the Fed, it could be a host of things. So I go back and I look at seasonal trades and seasonal charts. Now, I can say, I think with some authority this year, the dollar's been in what? An uptrend, basically. Most currencies down. So I look at the seasonals as well. And I'm not just saying them, I'll look at seasonal spreads. Do they have anything to work with it? And then I go to these interactive charts. Now, these charts are from Moore Research Center. And the beauty of them is I move my cursor over them and I see just where I'm at. Second part, I can keep on a 5, 15, or 30 year. Third thing, it allows me to plot if I want just bull or bear years as well on the bottom so I can see what they did at different times. Here's the limitation. If past performance worked all the time, why would I be here or they put out this service? Ask yourself that. It doesn't. It doesn't matter to me if a trade's got a 90% probability, 100, or it's not listed. It's a tool in your basket of tools, no more than that. Past performance does not guarantee future performance. If you believe that, great, you could. I'm not telling you what to do. I'm telling you what I believe. But it's a tool. And to me, it's an important one. And it's one you should learn a little bit about. And you see their reports. They'll explain how the seasonals work. And by the way, if you go to their website, they tell you to use this with other of your tools. So if you'd like a 2-week trial to it, we can set that up. Go to our website. You'll see on our free offers this. Click up here. It'll take you to free offers, or give my staff a call. Actually, don't call them tonight. They've gone home. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.